Good afternoon and welcome to the Boring Millionaire podcast. In this episode, I want to discuss what four stocks I'm buying this week, why I'm buying them, and how you could buy them no matter what your budget is. So I'm going to start with the budget. How is it that you could invest in the stock market regardless of what your budget is? Let's use an example and take $20. If you have $20 every week that you could put into the stock market, what I would do is I would take that $20, I would break it into four $5 increments, and then use those $5 increments to invest in different stocks. Now, the same discipline could be applied no matter what your budget is. You could take $50 and do 12 and a half each. You could do $100 and do 25 each. The point I'm trying to convey is no matter what your budget is, you can use it to invest in the stock market and you can use it to invest widely across a bunch of different stocks. Now, if you took $5 and you invested it in a company like Apple or Amazon, you might only get 0.05 of a share, which on the surface level, yeah, I know that doesn't seem very glamorous. It doesn't seem like you're really getting a lot of the company. But I like to say, don't look at the share count and look at the money invested in the company. In that example, you have $5 invested in one of those companies. You have $5 invested in your own financial future. And that is the way you can start to build a strong portfolio so that way you can carry your money to a better financial future for yourself. So let's say we take $20 this week. Where would I put the first $5? The first $5 I would put into Boeing. Now, Boeing is the leading manufacturer of commercial airplanes, and commercial airplanes are something that is certainly going to be around in our day-to-day lives. We are never going to see a world where we don't have flight as an industry, and with that, Boeing has a grip on the industry, being that they make basically all of the commercial airplanes. Now, Boeing, over the past few years, has been in and out of the news, and usually they don't have much good news surrounding them, but I always like to use that as an opportunity to buy the stock. So about a week ago, we did see the stock fall to around a 215 level. It's been trading at its 6-month average. So that's a metric I always like to look for when I'm investing in stocks. So given that it is a world leader in an industry that is never going anywhere, it's fallen to a slight discount and that discount landed it at its 6-month average. That makes me a buyer of the stock. I also want to say Boeing is something that I would like to hold for the long term. So I'm not just buying these as a short-term trade. Now, granted, they're in positions where they can move in the near term, but I am buying stocks like Boeing and the others I'm going to mention in this episode because the idea of the stock market is to invest for the long term. If you're buying the right companies and holding these assets over a 10, 15, 20-year timeline, you will certainly see your money grow and you will certainly generate an income if these stocks are paying a dividend. So the second stock I would be buying would be Disney. Now, Disney does have an expansive portfolio of different businesses that it owns. It owns Pixar, it has all the theme parks, it owns ESPN, Hulu. The list could go on, but I am shining light on Disney this week because it too has fallen from a slight discount to its 1-year average. Now, a little different than the 6-month, but the 1 year is frankly more important than the 6-month, and seeing it at these levels makes me intrigued to buy the stock. One look further at the stock itself, it had previously fallen to these 111, 112 levels. We've rallied a little bit to that 118 I had just mentioned, and now it is trading back down at these 111, 112 levels. So trading analytics or nerdy chart stuff would tell me that that's a double bottom on its 1-year average. And with that said, that is a great reason to be buying the stock. It is in a great position to be bought. And again, Disney is something that would be worthwhile to hold over the next 10 to 20 years. It has a brand recognition across the entire globe, and it has a portfolio of assets that are never going to go anywhere. So for those reasons, I am a buyer of Disney. The third stock I'll be buying this week is Nvidia. The reasons I'm buying Nvidia this week are because they just signed a $100 billion deal with OpenAI, which is the company that has ChatGPT. So a huge move in the AI space, and Nvidia is going to be an engine to the AI space, given that they are the leader in the semiconductor and GPU space. So Nvidia is already the most valuable company in the world, but I wouldn't let that kind of idea steer you away from investing in it. Just because it is the most valuable company in the world doesn't mean it can't grow in value. And this deal certainly shows that there is plenty of innovation moving forward, not only in the space, but with NVIDIA being the forefront runner in this. So I'm a huge investor in NVIDIA. I'm never going to sell it. And to the same idea I had mentioned with the prior two stocks, you want to hold these stocks for the long term. Now, I do believe that with this news, we can see NVIDIA create some near-term gains, but I am looking to hold it for the long term. So that way over the next 10, 15, 20 years, it will continue to grow my money, being that I am owning a space in the world that we live in. That's another positive idea that I always like to shine light on when I talk about the stocks I invest in. I'm not just investing in them because the charts look good or because I think I can make a little bit of money. I'm investing in these companies because they mold the way we live our lives. They mold our day-to-day lives. They shape our society. And with that, I want to be an owner of the world that we live in. So NVIDIA is certainly a powerhouse in moving our world forward, and I want to be involved in that. And then the final stock that I'm buying this week is Lennar. Lennar Home Builders is one of the leaders in home building in America, and they have also seen a slight price discount in their stock. They were trading roughly around $140 a share. They fall into $122 a share. So we're seeing about a 10% discount in the share price itself, but with that decline in price, it is falling to its one-year average. So again, an important metric to always look for stocks at. And I also just want to say it's a one-year average. So if a stock is going crazy over a year, if it's down real hard for a year, that one-year average is the average that we've seen it over the past year. So always an important metric to look at when investing in stocks. And I would also like to add, we just saw the Federal Reserve cut interest rates 0.25% this past Wednesday. So being that Lennar is a home building company, they are 1,000% going to benefit from these lower rates. So with all these reasons, I'm a buyer in Lennar. And I would also like to add that they pay a 1.64% dividend. So a dividend is an income that companies will pay their shareholders just for holding the shares. So just for owning Lennar, you want to invest in it and see it grow over the long term like we've been talking about. But over that long term, you're also going to generate an income because every 3 months, Lennar is going to pay you just for holding the shares. You don't have to vote on anything. You don't have to do anything. All you need to do is hold those assets in your portfolio, and then you will receive that income for holding those shares. So with all things said, thank you for tuning in. You can find all other episodes on YouTube, Spotify, and Apple Podcasts. And I'm also available on Facebook, Instagram, and Threads. I'm here to answer any questions you may have about the investment world and answer anything that will make you feel more confident about your money. My mission is to help you understand the investment landscape so you can start building a better financial future for yourself. So thank you for tuning in, and I'll see you next week.